MUSD is our flagship product on top of Mezo that we built at Thesis. And the vision for MUSD is the Bitcoin mortgage. We have this sort of opportunity in the market right now where you can enable or unlock a way for you to use your Bitcoin in the real world while keeping and maintaining your equity or your upside. So, and that's one of the things that, I think a lot of people right now with, Bitcoin's hitting all-time highs in the market, lots of great tailwinds from a regulatory and kind of institutional standpoint coming into the space. A lot of folks just want to hold their Bitcoin, right? But hey, wouldn't it be nice if you could actually, keep holding your Bitcoin and also get some utility out against it without taking much credit risk, if at all, right? And so that's sort of the driving factor behind MUSD and the spirit of that. And so right now you can actually deposit your Bitcoin on Mezo. It's live on mainnet as of last week. We announced the Bitcoin base. And you can borrow against your Bitcoin in MUSD at 1% rates right now. So quite favorable. And MUSD you can take and use in different applications on Mezo, as well as you could take it off chain and use it in a few select venues right now for shopping and kind of e-commerce type experiences. And as well as use it in broader DeFi. So, the Ethereum ecosystems, maybe we'll bring it to Solana, Sui, as well as some other ecosystems that are pretty thriving right now. But yeah, thinking about, kind of the core use cases of MUSD, it's really unlocking spending payments and then yield as well.
And a lot of the folks that, listen in would look at, sort of stablecoins and ask themselves, okay, great, for this given design, how does like a one-to-one peg get maintained sort of to the US dollar? In that regard, right, if we just sort of like take a very big step back and look at it from like 40,000 feet, most people view Bitcoin, as a pretty highly volatile asset relative to other things out there, like treasuries and so forth. What are the like forces at play, for MUSD in terms of keeping it as a stable peg 1-to-1 to the US dollar, and how should the audience rationalize that?
So first off, MUSD is 100% Bitcoin backed when you take it out. So when you the user experiences, when you come to Mezo, you can open up the MUSD application, which is, go basically borrow is what you're doing, and deposit Bitcoin into a contract, which is on the chain. So it's not being held by a centralized custodian. It's being held by the chain itself, which right now is secured by 21 validators. So in essence, it's a decentralized custodial model for your Bitcoin that sits there on chain. So you control the keys and the custody of those assets. You're putting it in escrow on the chain, but you have access to it at all times. And then you can mint MUSD against that amount up to 90% LTV. So we think that's pretty competitive in terms of what the market allows. We recommend probably more like 50 to 60% just to, account for some of that volatility. But we certainly have folks that are, a little more aggressive in maybe the risk appetite and are going closer to 90% for the MUSD issuance. And when you issue MUSD, so just to be clear, as the depositor, you are also the borrower. Okay. So you are minting MUSD against your Bitcoin, and that MUSD shows up in your account, and you can take that and go do things with it on chain, earn yield, spend it, whatever you want to do. And you're locking in that 1% interest rate when you mint that. So that won't stay that forever, but right now, because we just launched, we have, a pretty aggressive growth roadmap looking ahead. And so we wanted to offer an extremely favorable and competitive rate to folks, for access to this around the world. And that 1% is paid to the network, and there's no tenor or agreed payback period. As long as you monitor your position and make sure that, you're maintaining that collateral ratio, as agreed when you borrow against your Bitcoin with this MUSD contract. There's no payback. So it's sort of we're using this term buy now, pay never kind of thing, which is, a little catchy, but it is true, because as long as you make sure that you're monitoring your position and not get kind of liquidated or anything like that in the time of Bitcoin volatility, you're able to have this MUSD for as long as you want at that locked in fixed rate. So it's not a variable system. It's a fixed percent that you're paying. And we found that to be quite competitive to folks in the market. In terms of how, once you're holding MUSD and how do you maintain that peg, there's a number of factors that go into this, but in general, MUSD is pegged to the dollar. So it is equivalent to $1 collateralized by Bitcoin. If your audience is familiar with like DAI from MakerDAO, for example, or there's another project out of Switzerland called Liquidity, there's sort of some things that we were inspired by, our engineering team were inspired by from those ecosystem projects of the last few years. But is entirely aligned to Bitcoin. So that's sort of the new innovation here. Like DAI, for example, you were collateralizing with Ethereum. And then, DAI and MakerDAO is one of the most successful DeFi projects of all time. So pretty good sort of model, I guess, to sort of, follow, but bring it to Bitcoin. And then we also have quite a lot of arbitragers and traders and users coming in that help maintain that peg, right? So it can be actually quite profitable for folks, especially if you're a trading firm or, just have a DeFi user to come in and help maintain the system. So in essence, market, opportunities will also help enforce and maintain that peg.
Obviously, the stablecoin space is, sort of white hot. We just, had Circle go, public and have a big pop on day one.
Very exciting.
In the public markets, which is very exciting. I think overall, and a big vote of confidence, right, for I think the industry and sort of the technology. I'm curious, as you look at sort of the constellation that is like the growing universe of like stablecoins, what are like the advantages of a Bitcoin-backed stablecoin like MUSD compared to like the other, sort of stablecoins that are out there that are maybe non-BTC backed, as an example?
I think right now, just in terms of the advantages of MUSD versus others, the landscape and opportunity for a Bitcoin-backed stablecoin is completely wide open. I know of about 2 projects right now, sort of our indirect competitors to what we're doing. So there's a pretty tremendous opportunity right now for the Bitcoin-backed category. You have, I think it's something like 90+% of stablecoins issued to date are dollar-backed. So that's an extremely cutthroat and competitive category that USDT and Tether and Circle USDC have a stronghold on right now. And we will have fungibility with those assets. So, you can come into like let's say a liquidity pool or an exchange, and swap in and out with USDC to MUSD and back, which is an important point and kind of that build that market confidence around it. So you'll always be able to get back to dollars, which is a, key unlock for growth and use cases. But for us, really, I would say we're almost kind of competing more so with like the Bitcoin lending players, but, we're not doing any lending or credit on behalf of anyone, right? It's an entirely self-custodial and user controlled journey. And so that is a pretty appealing use case to a lot of these different demographics and customer types that we're working with. And then you have the, the very competitive rate to borrow against your Bitcoin, which, isn't, frankly, it's right now the market rates, just for context, are anywhere from 5 to 7% or even higher, right? So cost of capital is a huge differentiator for us. And then, kind of marrying up cost of capital. So low cost of capital that we have with, some great opportunities to earn rewards on the other side. It's a pretty nice 1-2 punch that we think this category of the market or subcategory of the stablecoin market, which is Bitcoin-backed stablecoins, is going to significantly heat up here in the next 12 to 18 months, especially as Bitcoin continues to proliferate.
Just curious, what metrics you personally look at to gauge Mezo's success at this stage? And, again, also maybe use this as an opportunity to talk a little bit about the go-to-market approach.
Sure.
That Mezo's taking sort of post mainnet?
For us, the North Star metric is on-chain activity because that's how our users grow with us. The more activity there is on-chain, and by activity, I really mean transactions or volume. And obviously, unique users is also a great KPI. There's kind of a Silicon Valley like SaaS metric called CAC to LTV, which is the cost of customer acquisition, CAC, over the lifetime value of the customer. So that's a metric we follow very closely internally. And, we'll be publishing that as we get bigger and kind of bring this to market. So those are kind of the North Stars for us. And then, also on-chain activity, a net percentage of that is fees, right? Because every time someone is transacting on the network, they're paying a little bit of gas or, maybe paying that interest rate that we've covered. And those all go back to future token holders and stakeholders of the network. And so the more we reward and kind of grow with our users on the community side, right, the more successful this project will be. And that creates a really nice flywheel, which is kind of where that circular economy, Bitcoin narrative comes in that we use for Mezo.